industrials. But at the close, we have a record for the Nasdaq Composite, up 0.2%, flattered by some of those mega cap growth stocks, in particular Amazon, which was up 5%.
Welcome to Closing Bell. I'm Courtney Reagan in for Sarah Eisen, along with Wilfred Frost and Mike Santoli, CNBC senior markets commentator. The Dow did close in the negative, down about 200 points, 205 points for a negative 0.6% close. The S&P 500 did also close lower, but it got pretty close, down 0.2%, and the Nasdaq did close higher by 0.2%, marking a record close. The Russell 2000, the weakest of the four major averages, down 1.4%. Shares of ride-sharing company Didi plunging after China blocked its app from being downloaded amid a cybersecurity review. Coming up, venture capitalist and early Uber investor Bradley Tusk on how that crackdown could impact Chinese companies going public here in the U.S. Plus, Fair leads Katie Stockton on the sector she thinks is ready to break out and outperform the broader market. Lindsey Bell from Ally Invest is still with us, and Jim Bianco from Bianco Research is joining the conversation. Mike, first comment to you. We did eke out a record here on the Nasdaq just barely towards the end of the day, started trending higher.
Yep, very much a Nasdaq day, and again, the yield move seems to set the tone in terms of what works. Resilient overall tape, but only really because of those mega cap growth companies. We still seem like we got to a point where the S&P itself on that win streak, started to look a little bit stretched like it was back in April. Now, no disaster struck in April. The market just flattened out a little bit. So we'll see if we're in for something like that. But and frankly, if the economic data continue to support this current theme of deceleration coming off the boil, and maybe that means a slightly more defensive tone to the market.
Jim, wanted to come to you on what your take was on those yield moves today.
Yeah, something similar to what Mike said as well, too. I think the market's getting a little bit concerned that the data, the real economic data, is weakening. If it was really concerned about it weakening, we would be down more than 15 or 20 basis points over 2 months. We'd be down 50 to 75. So I do think that there is an undertow of an inflation worry in this market. Again, I think that after we went from 50 basis points last summer to 1.8%, to back off to 1.4 or so right now is not really that much if we were really concerned about the economy slowing. So there is probably some fear that inflation is still hanging out there. And I think there is, and I think that that will manifest itself in the second half of the year.
But if inflation is still out there, Jim, and it is indeed transitory, is that really going to be a big concern after living for so long without really any inflation to speak of? And we've been talking about the strength of the U.S. consumer.
I don't think it's transitory, and I think the market is unsure about whether or not it's transitory as well, too. There are a lot of transitory things that have pushed inflation up and are backing off, but there's a lot more what the Atlanta Fed calls sticky things, such as home prices and rents that are poised to start rising, that are going to keep it going higher. And look, this is going to be the story of 2021. We have inflation. We have more inflation now than we've had in 30 years. The question is, how fast does it go away? That's the transitory story. I'm in the camp that it's going to go away a lot slower than people think, and that it's going to hang around a lot more. I know that there's others in the market under 140 has got people thinking that it's going to go away a lot faster. We'll see how this plays out over time.
Mike, how are people positioned at this stage? Is everyone fully invested already?
It feels that way for the most part. Has been for a while, though. If you look at, kind of wealth management clients, their equity allocations are pretty high. I think that the traditional investors are pretty well allocated. There's some kind of quant strategies that have been kept off balance by the fact that the market has been choppy back and forth, and maybe it's not all in. Margin debt has tracked with the gain in the indexes themselves. So it's not that they've necessarily overshot, but it feels as if people are fully participating right now. And people hate bonds. Any individual investor, people who have a choice not to own bonds, don't own bonds right now. So that tells you where people are leaning. It doesn't tell you that that's somehow a market peak, because bull markets remain sponsored by the majority for a long period of time.
Lindsey, we haven't talked about this yet during the show, but we did mention at one point that there is new data showing that the Pfizer vaccine is only 64% effective against this new Delta variant. Is the Delta variant and the potential impact here in the United States something that is at all entering investors' minds at this point?
Oh, certainly it is. You hear people talking about it becoming a potential concern later in the fall, especially when people go back indoors after the summer is over. So it's something that we have to certainly keep a pulse on. But then there's the other side of the argument that vaccines are, there are other vaccines that are able to guard against it. I'm no doctor, so we'll just have to wait and see till the fall.
Shepard Smith here. Thanks for watching CNBC on YouTube.